Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 17th of December 2014, in what might be basically the last two normal trading days of the year. Friday is going to be a waste of time with options expiration. It's triple expiration, as we know. And of course, next week we head into holiday season. We have already begun Hanukkah. That can slow things down a bit potentially, but there's still a real good opportunity for 2 days here. Let's talk about all the factors that are affecting the market right now. First of all, with triple expiration this week, we do have the possibility of an options unravel, or the likelihood of one. Usually happens on the Wednesday, sometimes on the Thursday. That's why both of those days could be good. We have a 2-day Fed meeting that's currently going on. It will end Wednesday with the announcement of obviously no likely rate move at 2 p.m. Eastern Time. And so that is kind of a mixed bag, because while we would often look for that options unraveling move after the first hour of trade on Wednesday, you usually don't get much action on the Fed announcement day. So when a triple expiration week is the same week as the 2-day Fed meeting, kind of makes for an awkward situation. So we'll be looking anyways. We'll obviously be watching for it. We'll trade the first hour like we normally do. We'll look for a potential options unraveling move starting after that. If we do get it, great. If we don't get it, we'll look at what happens after the Fed announcement. We'll look for our usual three-wave phenomenon and see if there's anything to do in the afternoon. If we don't get the options unraveling move on Wednesday, obviously we would expect to see it on Thursday, and that makes Thursday really exciting. We also have the CPI an hour before the bell on Wednesday, so that's more data to throw into the mix. And then that's on Wednesday, and then on Thursday before the market, we've got the initial and continuing jobless claims. Those are the weekly numbers, and then the Philly Fed and leading indicators 30 minutes into the market. So kind of a mixed bag as to what to expect tomorrow. We did see some wild action because of oil today. I'm going to show you that oil chart. This is, by the way, the ES front month futures contract daily chart. You can see the nice rollover right off of the 13 sell signal and the pink risk line that contained the market exactly from that signal. We got that rollover there. Now let's take a look. I'll stop and look at crude oil real quick here. Had a day where we kind of had gotten lower. We got into that 54 area, but bounced pretty sharply all the way back to 57. Caused the stock market to bounce. I think a lot of people worrying about the complete plunge in oil. Obviously, it's good for the economy when oil is down, but at the same time, does it mean that there's a lack of demand, and is that a problem for the economy, or are the supplies really up? Or has it just been a lot of speculation up here over the summer that held the prices up, and that's kind of coming undone, especially heading into triple expiration? Remember that if you look at that, this is the December expiration. The last triple expiration was the third Friday in September. At that point in time, we were holding, that's the big white up day in the middle of the month of September that you can see on this chart, closed just under $96 a barrel, which doesn't seem like anything special from a pricing perspective. But it's basically been from that point, we held up another week or two and then rolled over. So this to me looks like a quarterly contract situation, but we'll see what else is going on. Obviously, there's a situation now in Russia with the extreme jump in interest rates. And that's also going to have an impact, because now companies like Apple announced today after the market that they're holding off on sales because the pricing is tough for them, given the inflationary expectations that are going on and the interest rate bumping that you're seeing as people flee the ruble. So a lot of confusion out there. That could actually add some volatility that we usually don't see to the last 2 months of the year, but we're going to stick to our usual mode, which is that the last 2 weeks, once you get into next week with the holiday, tend to be fairly light, and we will trade accordingly. All right, let's take a look at a couple of the indices, which I can't get to come up at the moment. That's interesting. All right, well, I'm going to go back to the ES for a minute and show you the 5-minute chart, just so you can see the action we had today. It was actually a little bit of a wild day, fairly unusual for a Fed, but mostly because of the part of the middle of the day there. So we gapped down, we headed up. It was a bit choppy the first hour. All that did was get us back to fill the gap. It was the move after that was a little bit of a surprise. That was when oil was in its rally mode, up 4 points off the lows. The stock soared, got up to 2012 on the ES, then came back and gave that back by the middle of lunch, and we were stuck to the VWAP, which is about where you'd expect to be for a Fed announcement. And we sold off in the afternoon, and I'm sure a lot of that was related to the situation out of Russia and the fact that there's companies like Apple having an issue selling product or having to put off sales from the online store. Here's a look at the NASDAQ futures. This is the NQs, and this is the 5-minute chart of that, also closed at the lows of the session. We'll look at the NASDAQ daily chart. And this is where I'll bring the daily chart back over, and it's not loading for some reason. So I won't be showing you the daily chart of the NASDAQ for whatever reason, but we did lose 16 points on the S&P. We lost 67 points on the NASDAQ. We lost 4 points only on the SOX, 39 on the biotech index. The VIX closed up 3. Big day up for the VIX. Here's the VIX chart at 2357. Again, we're going to watch for any sort of, this is starting to look like sort of a panic mode based on the VIX. Put up a video this weekend, but look at that 13 buy signal on the VIX right there and the way it turned up right off of that point. All right, let's take one last look. I wanted to show you guys oil, the intraday action on oil. Again, you can see the stock market looked very similar this time. The gap down in the morning. We got a 13 buy signal on the 5-minute chart of oil in that second 5-minute bar of the day, and that was the low of the session. Turned up and ran from there and then came back and flatlined right on the VWAP. So small gain for the day after gapping down. But that did have an impact on the stock market. So there's a lot of reasons to see some volatility. The Fed announcement is the one thing that would hold us back potentially on Wednesday. So we've got 2 days left to push this year. Monday was an okay trading day. Tuesday was a little bit choppy. I think, as we said, coming into the week, Wednesday and Thursday were going to be the days to focus on. Friday is likely to be slow unless there's a really big deal going on in the world with oil or the situation in Russia. But other than that, you usually don't go anywhere on a triple expiration. Most of the big players will have their positions closed out ahead of that. So that's it. We'll be in the lab calling it as usual to help you out making money. Charts brought to you by eSignal. Have a great trading day.